Yes, people, right now we're taking a look at this Guardian article about the dash for gold. So a lot of people have started to notice gold once again. So let's see what's going on here. So in case you didn't notice, gold prices have gone above $4,000. So they were racing nice and high. And then there was a little bit of a pullback, about 5% in the markets. But we can see here that retail sales in the UK are pretty much 3-year high. So let's see what's going on. Demand for online jewelry, the iPhone, and other things are happening in the last couple of months. So let's see what's going on here. So it says here sales at UK retailers rose unexpectedly last month to the highest level since July 2022, according to official figures, boosted by tech purchases amid the release of the new iPhone 17, as well as strong online demand for gold. Now, of course, it's been quite a while since the iPhone came out, over a decade now, and we've gone from the very first iPhone to iPhone 17. So Steve Jobs was one of the main people, and Wozniak, another kind of like main steerer of the iPhone when it came out, and it's gone from the very first iPhone all the way now to iPhone 17. So you can see the amount of different models that have been released over the years. And as I mentioned, the demand for gold now is up as well with the economic markets, the tariffs in the USA by the President Donald Trump, and global conflict and poor performance in the economy is affecting demand for various elements there. So a lot of people are kind of hedging against that, then putting their money into solid gold metals, precious metals like gold, silver, palladium, and so on. So let's take a look here. So the Office of National Statistics shows that retail sales volume have gone up by 0.5% last month in September. That's the fourth consecutive monthly increase, confounding economists' forecast of 0.2% monthly drop. Sales of products at computer telecoms retailers have grown strongly, like we mentioned with the new iPhone release and new techs coming out, tech kind of items. Online sales have gone up as well for the eighth consecutive month. That's around internet jewelry and big demand for gold as a safe haven for as a commodity, and it's enjoying its biggest rally since the 1970s. As we said, amid global and worldwide turmoil in the marketplaces. So a lot of people are looking into gold. So the largest sale rise in September was at non-food stores, which include department stores, clothing, household goods. They rose by 0.9%. So sales volumes in terms of total have gone up by 1.5% of the year to September. The Office of National Statistics has also revised up its August monthly increase from 0.5 to 0.6%. So, despite last month's rise, sales volumes remain 1.6% lower than pre pandemic levels from February 2020. Now, last month's figures come on the back of strong summer sales. Shoppers were motivated to buy more clothes during warm months of the year and Euro 2025 women's football. So, I think going back to springtime, we did have quite a few weeks of nice hot weather. Sunshine basically was totally different from previous years. And then we had some, good few weeks in summer as well. Now, does that kind of spell a tough winter ahead as we're going into autumn and towards winter with November coming up? I mean, I don't know, but having good summer, good kind of spring could mean a rough winter, but we'll wait and see how that goes. So sales volumes have risen by 0.9% between July and September compared with the previous quarter between April and June. So July's retail sales were delayed by the ONS by 2 weeks. It's the latest signs of problems of the UK Statistics Agency in terms of producing reliable data. So there was some hoo-ha around the Office for National Statistics, and there was some commentary around the data that they're producing and so on. So yeah, so that seems to be ongoing at the moment. We do have a budget coming in next month with the Chancellor Reeves for the Labour Party on the 26th of November. There will be an autumn budget. We'll wait and see how things develop, but it's looking like not a very good budget, to be honest. Big tax increases, other issues as well, around various other kind of things happening in terms of tax rises and issues with the economy and so on, where the government looks to plug gaps of 40 billion plus pounds in the UK economy. So, despite September's stronger than expected volume of sales, industry experts have warned that the trend is not likely to continue given the economic backdrop of continuing high inflation, weakening employment, and the prospect of tax rises, like I just mentioned. Well, we have seen less vacancies in the market with the previous budget, where a lot of the companies were charging more taxes, national insurance, and all that kind of stuff. They have to contribute more, so companies are reluctant to actually recruit. And we have also seen the rise of AI technology, which is actually replacing junior roles, and we're seeing graduate kind of jobs on the basic entry levels disappearing. So there is some storms in the horizon there for the economy in the United Kingdom. Now, the budget, which is due shortly, is going to be during a period when Black Friday, so you have the sales on Amazon and various other online retail platforms. So the broader economic picture shows consumers are tightening their belts, so basically spending less, just as retailers are gearing up for Christmas trading period. Obviously, normally that's the busiest trading period for many businesses across the country and worldwide. So obviously, the late autumn budget next month might make things worse as well as we go into the Christmas period. So, like I said, we're seeing people not spending as much. So this could reduce economic prosperity for companies and also individuals. And with higher taxes, we could see a lower kind of quality of life here in the UK. Do let us know in the comment section below what you think about that. Have you invested in gold or anything like that? Or what do you think about the economy right now? Don't forget to like, share, subscribe. Catch you in the next one.